Okay, I think we are good. I think we are live. All right, let's see what we got here. I'll open my chat and we'll get started here in just a moment. All right. And let me just grab that information here. Great. All right, so we're live this morning. Hi, everybody. It's Joe Bladek here, mortgage broker, doing a live Q&A this morning on Monday. And I'm really excited to just be able to come on here again. I know it's a little later than last week, but I did want to come back on in case any of you were waiting to ask me any questions today. I'm going to try to make this more of a regular thing going forward. And what I wanted to do this morning is to focus on a theme, and that theme being the mortgage changes that are happening on July the 1st, and if I can help clarify any questions on those, as well as if you have any other questions that pertain to anything regarding to a mortgage, feel free to send them in. I am taking questions anonymously this morning, and it's really easy. So easy that I will show you all how to do it here. So you see my live going on your phone or on your desktop, and you click the link that says Jot Form in it, and you just click on that, and you'll see my face to make sure that it is the right destination. And then you'll be able to ask me your question there. So say, what are the changes on July 1st, 2020? You don't have to make it perfect. There's the question. Fully anonymous. You send it in, and then I get notification that you've asked a question or that someone's asked a question, and I will answer it on air. Also, I have my guitar ready to go right here. And if we get 20 questions this morning's session, I will take a request on air to play a song on air this morning. So please send me your questions or make a comment online here, and I'll see your comment and I'll answer your question online. So let me just go in and see if I have any questions yet. I know that we're just starting out, but let me just go in right away, see if there's any questions yet, and I'll just take a look at that for us first. Hope everyone's doing well this morning and that everyone had a good weekend. The weather's nice this morning, blue skies here. So let's see here. Do we have a question yet this morning? All right. As we wait for our first question, there are some mortgage rule changes coming on July 1st, 2020, and I'll cover off those in detail today. I hope to clarify those changes. I've been getting some questions from existing clients about these changes, and there seems to be some confusion out there, and I would like to clarify that for everybody. Also like to give everyone just a general idea of what's happening in the market, and hopefully play a song later on if I can get 20 questions. Okay, so we do have our first question, and let's see here. Our first question is, do I need 20% down to buy a home now? And the answer is no. We can still get mortgages with less than 20% down. These changes on July the 1st do not change things, so you need 20% down. And 20% down is an option available to anyone, as always. And the benefit of going with 20% down payment on a home is that you don't have to pay what's called CMHC or mortgage default insurance. And for those of you who do not know what that is, it's a default insurance that's a one-time charge, and it's added to your mortgage balance when you are setting up your mortgage. usually added by CMHC, and it essentially protects the bank in case things go sour with the mortgage. Having mortgage default insurance benefits a lot of home buyers for a few different reasons. There are better rates that you get as a home buyer because the bank's risks are lower, which is kind of strange because you think that 20% down would get a better interest rate, but it's actually less than 20% down that gets you a better interest rate. And also, having CMHC, or what's called mortgage default insurance, allows you to also have flexibility with your mortgage in case there is a life circumstance. They have what's called hardship. And if you ever have a job situation where you lose your job for whatever reason, or there's, say, a family situation, maybe like a death in the family, then there are flexibility options that allow you to skip or defer a mortgage payment. This is in addition to what the government mandated from COVID-19. It's just built into the mortgage. So you don't need 20% down to buy a home. You can still buy a home with less than 20% down. So thanks for your question. We have one question on the board out of 20. So let me just mark that down. And we're getting close to having our first song played on air live for the Monday morning Q&A. So let me just check here, see if there's any other questions this morning. As I mentioned, the questions are fully anonymous if you submit it through the forum, and I will answer them on the air. If you ask your question through the comments in my Facebook post here, or Facebook page, or on my YouTube channel where we are doing this live, I will see it on my other screen here, and I'll be able to answer it, but it will not be anonymous. So if you want to submit an anonymous question, please do it through the form. So let me just see if there's any other questions here. You can ask me anything at all. Okay. What do we got? Okay. Okay. We have another question coming in. Can I still buy a home with 5% down, even though I'm not considered a first-time buyer? Okay, so I'm assuming that in this case, maybe you're buying your second or third home, quite possibly your fourth or fifth home, and that this is still the home that you're going to live in, not a rental property. We have to make sure we clarify that. But yes, if you are moving into this home and you're not a first-time home buyer, you can still buy again with 5% down or 10% down or 15% down. You don't have to have 20% down to buy a second or third home as long as you're moving into that home. And you don't have to be a first-time home buyer to get access to that 5% down program. There's actually quite a lot of people that what they do when they sell their home is say they'll have a lot of equity tied up in their home, and they can sell their home for, say, $450,000. What they will do is they will sell their home and use what equity they have to pay off a big chunk of, say, credit card debt, maybe a couple car loans, and then go into their next house purchasing with the minimum down payment with 5% down because they still qualify for that home. And then they will take the rest of the money they have remaining from their equity from selling their home and put it in the bank for, say, an emergency fund, or maybe there's some renovations or improvements planned for the home. That's actually a strategy a lot of people use because, especially if they're a lot younger, to be able to get into that new home debt-free without with having some money as well in the bank ready to go for any improvements or an emergency fund. So yes, to answer the question, you can still buy with 5% down if you're not a first-time home buyer. Okay, thanks for a question. We are up to 2 questions now. So 2 questions out of 20. Remember, questions can be submitted anonymously through the link. the Jot form link. Let me just go through that with you all again. I will see where I had it on my phone here. Okay. Let's see where we are at. And again, if you want to ask me a question through the chat on Facebook or on my YouTube channel, be aware that it's not private and not anonymous. If it's through the form, it's fully anonymous. Okay, just trying to find that link for you all to show you how to submit a question online. Okay, here we are. So again, you find the post, you click on the link, it'll take you to my picture. You type your question in there. Hi, Joe. And then you press submit. Really easy. And then your question is submitted fully anonymously. So while waiting for questions, I'll give a brief market update as to what is happening with the market right now, so you can all find out what's happening with interest rates and all that. Since last week, we have not had really any major changes with interest rates. Last week, we did hear a lot of buzz about a new interest rate, 5-year fixed rate that was under 2%. So rates are historically low right now. They have not changed since the weekend. They are still historically low this week. It's a good time to lock in a mortgage rate if you are in a variable rate and have been looking to lock in. It's also a good time to get pre-approved for a mortgage. When you get pre-approved for a mortgage, we lock in that interest rate for you for 4 months. It's pretty amazing, for 4 months. So as you're shopping for your home, you don't have to worry about checking the market and seeing what's happening. You will get the lowest rate, either what's on your pre-approval or the market rate when you buy your home at that time. And it's really exciting to be in a market right now where things are opening back up, and there are a lot of homes coming on the market, as well as there is quite a lot of good interest rates on the market. It's a really good time to buy a home. So great. We have another question. With the rule changes on July the 1st, will I qualify for less mortgage? Okay, that is actually an excellent question. And it's going to depend on a number of things. So the answer is part yes, part no. So when anyone buys a house in Canada with less than 20% down, say you have 5% down payment or 20 or 10% down payment or 15% down payment, but not quite 20, we have to get mortgage default insurance. And typically this is called CMHC insurance. And you hear a lot of lenders and mortgage brokers like myself or bank specialists that work, say, directly for one specific bank talk about CMHC insurance on your mortgage. With CMHC insurance, if your mortgage is going to be set up through CMHC, then you will qualify for less of a mortgage. The difference in what you would qualify for now versus after July the 1st has been averaged around 11% on your purchase price. So say if your purchase price was $500,000 before, now you'll qualify for slightly below $450,000. There is a however though, and the however is there are two other major private mortgage insurers in Canada, Genworth being one and Canada Guarantee being the other, and they essentially do the exact same thing as CMHC. The difference being that they are not owned by the government, and that's the only difference. The other things that people ask is it the same price? And yes, it is the same price, same cost, same premiums that they charge, So say if you were to get a mortgage through CMHC today versus through Genworth or Canada Guarantee today, you would notice no difference on your end. The only thing would be who the mortgage is insured with. And those other mortgage insurers are not following the same changes that CMHC is following. So it's a little bit complicated out there because, yes, any mortgage with CMHC insurance will qualify for 11% less purchase price. However, as a mortgage broker, we can send your file to a different mortgage insurer and still obtain the same amount of mortgage after July 1st, so long as we can go with one of these other mortgage insurers. And there's a lot of reasons why someone would want to go with CMHC versus Genworth or Canada Guarantee. And there's also, but there's really no real reason that is tangible, right? There's no cost difference. There's no premium difference. There's no change on your interest rate. You still get the same good interest rate, and you will essentially notice no difference on your side of the mortgage. So I hope that clarifies things. You will qualify for less through CMHC insurance. However, there are other mortgage insurers where you can still qualify for the same past July the 1st. The difference being someone would want to use CMHC insurance specifically. So if someone wanted to use CMHC insurance specifically, and this may be for, say, a thin credit application, then you'd qualify for less of a mortgage. And when I say thin credit, this is for folks that are setting themselves up with a new mortgage. CMHC has a thin credit program that allows you to get a mortgage with very thin credit. And with very thin credit, the other mortgage insurers will not approve that file. So if we get that through CMHC, CMHC actually will allow a more credit leniency on those types of mortgages. However, it's all case by case. So if you find yourself that you're in a situation where you are thinking, I don't know if I'll be able to get the house I want after July the 1st, then I would recommend you either contact me. You can do that through the calendar link in my description below, or you can contact your own mortgage advisor, broker, or specialist. So thanks for that question. We are up to 3 questions now. As I mentioned, once I hit 20 questions, I will play a song live on air here on my guitar. I'll take a request, and I have my guitar tuned up, ready to go behind me here. And just so I can prove it to you all, I got it right here. I got my daughter's pick on there, the pink pick. I'm ready to play some guitar. Let's put that back. 1 second here. Okay. Let's see if there's any other questions. You can submit anonymously through my JotForm account in the link description. It's really easy. Or you can submit on the comments on social media, and I will review your question there, but that is not anonymous. Okay, just refreshing here. Can I still use a borrowed down payment to buy a home? Okay, great question. This is also changing. As of July the 1st, borrowed down payments will no longer be allowed. So that is something that is changing as of July the 1st. So if you're planning to buy a home with a borrowed down payment after July the 1st, and you need CMHC insurance or mortgage default insurance, and the down payment is less than 20%, then you will not be able to borrow your down payment any longer. That is something that will be non-existent. You will still, though, be able to roll in, say, minor credit card debt, or be able to have a lender add the closing costs to the mortgage, which is really key. And something that I'm seeing a lot of these days is, say, a first-time home buyer, they will have, they want to buy, say, a $400,000 home, and they have $20,000 down, which is 5%, but they may not have closing costs saved up. And closing costs can be in around $5,000 extra for things like land transfer tax and legal fees and CMHC tax. So just some closing fees. So that $5,000 we can actually add to the mortgage still after July the 1st. The difference is you won't be able to borrow your down payment. Now, if you are looking to buy a home with borrowed down payment, you can still do that so long as the contract where you buy the home is dated prior to July the 1st. So you can still close on the home after July the 1st, so long as your contract to buy the home is dated before July the 1st. So that's a great question. And I want to also answer this question for any property investors out there, because a lot of questions have been coming in over the last week about using a line of credit on your principal residence to buy a rental property or another property, using that line of credit as a source for your down payment. And I looked into this in detail, and I found that there are certain lenders that are also making this change internally, but there are lenders out there that will still allow this as a strategy. So for any of my friends that are investors, folks that are looking to BRRRR a property, buy, renovate, rent, refinance, and repeat, you will still be able to do this. And please contact me to discuss your specific scenario. So great question. So now we are up to 4 questions. We're getting close. I'm getting a little bit nervous now. We might actually hit this today. Okay, let's see if there's any other questions this morning. Remember, you can submit an anonymous question through the link below, or you can go and type your question in the comments and it will not be anonymous. Let me just see if there's any comments this morning. I'll just refresh my chat. Okay. No new questions yet. All right, so while I'm hanging out, I'll just see if anyone does want to ask a question. Just you can submit it through your phone, online, anonymously, or through the comments. Changes on July the 1st are with regards to any mortgages with less than 20% down only. You will still be able to buy a home with less than 20% down payment if you are not a first-time home buyer. So second, third, and fourth-time buyers will still be able to buy a home with 5% down. And borrow down payment rules are changing as well. Okay. And rates are still pretty much the same as they were last week. If you are looking to lock in a low rate, you can get pre-approved, and that is good for 4 months. And if your pre-approval it does expire, we can simply reactivate it for you at the end of the 4-month period. Okay, you can click the link in the description to set an appointment with me, or submit an anonymous question through the other link provided as well. I'll give 1 more minute for any new questions coming in. I don't have any new questions coming in. All right. Thank you so much for watching today. I appreciate anyone that is watching this the video right now. I really enjoy doing these, so I'll try to pop on next week on Monday. If anyone has a suggested time, I was thinking Monday mornings would be a good time, because a lot of people are looking at houses on the weekend, and they might come back after looking at those houses with some questions with regards to how to set up a mortgage. But if anyone has a better suggested time when to do these live Q&As, feel free to also send me your feedback either personally in the comments or through my anonymous question app that is posted as well. I appreciate all your comments so I can make these programs better and more useful for everybody. This week, we are running a few different webinars. We're running 2 first-time homebuyer webinars this week. Our first webinar will be featuring Caleb Streeter, and we are doing a first-time homebuyer webinar in Aurelia. If you are looking to sign up, you can sign up through my Facebook page, or you can find the webinar online as well. I'll try to remember to post the links below. And we also have another webinar this week in Barrie. That one will feature Sean O'Toole, and that one will be happening later this week as well. And we are looking forward to getting that information on our first-time homebuyer webinars. We have a lot of great information for first-time homebuyers. We typically end up focusing on the basics on how to buy a home, as well as some of the important things to know when dealing with a real estate agent. And also we cover off mortgage advice, mortgage mistakes people make, and we'll cover off any rebates and grants and credits that first-time home buyers are entitled to receive for a home. Next week, we have some more webinars coming up, but I will save that information for Monday next week. Just going to check one last time for some questions, and I'll sign off here today. Okay, just checking one last time for any new questions. Okay, looks like that's it for this morning. We did hit, I think, 4 questions or 5 questions this week. I'll keep my offer for next week. If we can get 20 questions, I will play a song on request on my guitar, live on air. We'll see you all next week, everybody. My name is Joe Bladek, mortgage broker, and feel free to check out my other YouTube videos online. And I look forward to seeing you all again next week.